Breaking news from the United States. The latest updates from the Federal Reserve, Fed, have been announced, including statements from Powell. Here are the highlights from our exclusive report.
The U.S. Federal Reserve, Fed, has decided to keep its policy interest rate unchanged, marking the first time in 15 months. Staying in line with expectations, the Fed has maintained its policy rate within the range of 5 to 5.25%, which stands as the highest level in 16 years. Market pricing suggests a 60% probability of a 25 basis points rate hike by the Fed next month. Fed Chairman Jerome Powell commented on the decision, stating that nearly all Fed officials believe that some additional interest rate hikes this year would be appropriate to gradually bring inflation down to 2%. Please note that the provided text is a paraphrased version and may not precisely reflect the wording or nuances of the original source. Powell said, "We remain firmly committed to the 2% inflation target. The full effects of tightening have not been felt yet. Nearly all policymakers view some additional rate hikes this year as appropriate. The labor market continues to remain tight. Activity in the housing sector remains weak. We still have further to go to get inflation back to 2%. Inflation has moderated somewhat, but inflation pressures remain elevated. The Fed is certainly aware of the challenges posed by high inflation. We see the effects of our policy tightening in the housing sector. We are extremely mindful of the risks posed by high inflation for both sides. The full extent of the effects of tightening remains uncertain. Given how far and how fast we have moved, we decided that it is prudent to keep rates steady at this meeting. The FOMC will take cumulative tightening into account. We will continue to make decisions on a meeting-by-meeting basis.